Good morning, traders. It is 8:05 a.m. Chicago time on Wednesday, the 18th of March, 2015. I apologize about the delay. There seems to be more problems with Google Hangouts on air, and it just would not start up in a normal way. So we're starting with a chart on the screen. Derivatives trading involves substantial risks to traders. Is not suitable for all investors. Past performance is not indicative of future results. The news overnight: Japan's trade deficit balance registers its smallest deficit in 2 years as exports rise for the sixth straight month. China's February home sales registered its 10th month of decline. Shanghai Composite rises another 7% to a 7-year high amid speculation of additional stimulus measure by PBOC, the central bank of China. The Bank of England announced its minutes today. They voted 9-0 to leave interest rates unchanged at 0.5% as expected. Currently, Chancellor Osborne in the UK budget debate. The UK deficit to be halved over the next 5 years. To use additional resources to get the deficit to decline. Budget statement to Parliament this morning. You can watch those on financialjuice.com or Sky News on YouTube. Sweden came out just a few minutes ago with a surprise cut to their repo rate of 15 basis points to negative 0.25%. It expands its QE to Swedish kroner to 30 billion Swedish kroners from 10 billion Swedish kroners prior. This was a completely unexpected move. And then looking ahead for today at 9:30, weekly DOE crude oil inventories are expected at 9:30 Central, 10:30 Eastern. Also at the same time, we have Bank of England's Conliffe in Frankfurt, and then the big one, of course, is 1 o'clock Central, 2 Eastern FOMC rate decision expected to leave both the lower bound and upper bound unchanged between 0 and 0.25%. At 1:30 Central, 2:30 Eastern, we're looking for Fed's Yellen's press conference. The focus of the market is on whether the Fed will remove the word patient from their statement, and also looking for GDP, inflation, and unemployment forecasts to be revised lower amid recent economic developments. So that's what the market's looking for. This is a big deal. This is the biggest announcement of the month. And so we're expecting the markets to be to respond to that. So that's where we are. Let's look at where we are as far as the technical end of the thing goes. Yesterday, our first hypo was for wide swings on the open, expecting chop, open auction in range. The market was opening near that neckline low at 2062, 2061, and so the main idea was for a responsive buying up, and then we're looking for selling. If it breaks the 2062 area, for a push down all the way down potentially to 2054 and 2050. And so what we got yesterday was selling on the open, a small sell push on the open, then a strong rotation up 5.5 points towards the prior day's close, Monday's close, could not quite get there, and then a tweezer top type of return back to the low, and then we did manage to get through that 2062. 2062 was 61.75 was the initial low, just a tick below the 2062 we talked about. and then it finally started to work its way through that excess low. The excess low is easier to see here on this chart. So here's the the start of the singles, basically the flagpole at 62.25, and we're looking. The idea yesterday was that if it does break through and into this the singles here, then we're looking for it to continue to drop into this 53, 54 area, the singles left behind from Friday. If not, then it's likely to push through to 2050, where the volume profile that day gets really thin. And it did manage to do that. It found support at 56.25, could not quite push through. 56.25 is an interesting area for it to stop. It was where the selling began on Friday. The strong selling began on Friday. It found buyers in this area, balanced out, took out the mid, and then actually put in a neutral day. So we broke the IB low, and then we went into balance here, built a little bit of volume in this area. You can see this kind of building in here, a nice balanced compressing profile in this area. You can see how balanced it is, and then it starts to break higher through the mid, and then it finally takes out the IB high, the first hour's high, this yellow line, for a neutral day, and then maintains these prices as fair. Overall, between the 2 days, we have the point of control pretty much in range of the prior day's point of control on Monday, inside of the prior value area. This is technical balance, and so for that reason, these 2 days now become a composite. So we draw a profile around those 2 days to see where we are. I'm going to show you another profile that shows the big picture, and it's interesting. This area's got a three-pronged profile that's very prominent. We're at 2059 right now. We're trading on the low end of the value area, right against the value low at 2059. Also the IB low yesterday, with the overnight low just below us. The overnight session has had quite an interesting swing lower on the European Open. Here, and for it still did not exceed yesterday's range. So essentially, the overnight session created a clear double distribution profile with an LVN zone in between, and has shifted the point of control down just about 15-20 minutes ago. Shifted the point of control down with a weak low, with the overnight low just beneath us, making this look very weak. And it's also creating a situation where, again, the 2062 through 2064 is an over-under area based on the LVN zone that was created here. So this morning, I'm looking for the market to be responsive up early, but I'm looking for it to take out this low at 53.75 and start working its way down into the 2050, and then into the balance, this last composite zone down here, the target of which is 2039. Overall, if we look at the action so far, we have one large distribution up top with a cutoff at 2077. If you recall, I also talked about the 2074, 75 being a key area. Excuse me one second. 2077, 2074, 75 being the low of this distribution here, and we have a second distribution of volume right between 2077 and 2055.50, 2056. That's the second distribution, and then the third and lowest distribution is between 2056 and the low of 2030.75. So as it sits right now, the market's still exploring the middle section of this profile. It's unable to get to 2077. I think there's significant resistance here at 2077 if we get up there. And so it seems like to me that today would be a decent day for this to start rolling over. Remember, the market does not generally push higher and then push lower, although lately it has pushed lower and immediately pushed higher. But the normal auction behavior is that the market pushes to an extreme, then puts in a balanced day like this day here last Wednesday, and then it rotates up. Just like yesterday or Monday, it put in this gap up, pushed higher to 74, and has then put in a balanced day. I expect this to roll over. So my primary hypothesis is a potential test higher on the open, but the key idea for today is selling. And I'm looking for this gap zone to start getting filled here between 2053.75 down to the close, to the gap close of 42.50, with the main target being 2039 below. That's the main idea for the day. If the market pushes down into the overnight low, comes back and gets into value again, then Hypo 2 will be in effect, looking for 2065.50 as an initial target. The profile is balanced on this day, so 2066.50 would be next. And then I'm looking for it to pause and stand by. Overall, when we look at the action, the range has been well within what we would consider to be normal. You can see it on the profile. Normal is between 2025 with the most common range, day range at 10.25. And then volume has been just a little bit below the most common volume, which is 1 million contracts per day. This is day session only, by the way, with the overall normal range being 1.6 million down to 706,000 contracts, as you can see on this profile here. This is on IRT 12.2 beta 6 that you can start drawing these profiles on these indicators. Very, very useful tool to show us what normal behavior is, or what the first and second standard deviation is. Second standard deviation for range is 30.25. This means that as far back as the 9th of October of 2013, if you take all of those days in, 95.45% of the time of this data set was spent between 30.25 points and 4.25 points, including those rollover days. So that's what we're looking at for today. I'll leave you with that. There's not much more I can add here. Crude oil's taking a nice pop here. The spread between the April and May has been in play. And you know, there's an anticipation that storage is going to be full, is going to fill up. Oh, I need to reload this data. But the storage is likely to be full in the coming months, and that prices are likely to push lower. So there's a bearish tone to crude still. We'll see how that plays out. And then if we look at the Euro stocks, very clean chart. Again, you have an upper distribution, second distribution, third distribution, and a fourth distribution. And this morning, we're moving from the middle distribution down to the point of control. This is the Euro stocks being in complete balance. It looks to me like the Euro stocks are likely to roll over and start exploring lower prices, and the areas below that were left open, with the key target below being this 36.40, 36.26, and the big target's 35.74 below. So I'm looking for this for the euro to roll over, not the euro stocks to roll over and test this 35.74 over the next week or so. We'll see how that works out. I'll talk about it throughout next week. Anyway, I'll leave you with that. Apologies for the late start. It's 8:20. I'll let you get prepared for trading. I want to remind everyone that tomorrow we're having a convergence event sponsored by Stage 5. We're going to have Chad Payne from IRT go over the latest and greatest with these charts and how we can extract market behavioral information using the charts, using studies. It's a very, very effective tool. And, I invite you to participate in it. You'll see a tweet for the link shortly. Take care. Bye.